my time.
Okay, g'day, Rudy here. Just looking at a Motley Fools article. It's just the best ASX dividend share to buy right now. So what are we looking at? So Washington H. Soul Patterson and Co. Okay, so this is the stock. Another impressive milestone for the dividend. So they are growing their dividends. Like each year the amount's going up, which is good. So they've been going up at 10% per annum. And here we go. So their latest grossed up, so that includes the franking credits, is 4.1%. Now that's not that great really when you've still got the risk of capital loss, although we'll look at the share price. It is quite stable, but why would you do that when you can just go to a bank these days and look at these rates here? Even Commonwealth Bank, the big boy, gives you 4.75 without risking your capital. So like why would you do that? So let's have a look at the underlying Soul Pattersons. So we're looking at the chart here of Soul Pat. So this is a monthly chart. So it's really been, so when's this? This is May 23. So it is just trading sideways really. So your capital probably is pretty safe there. But why would you risk it when you can get a higher return in the bank? Now my other two, if you're after dividends, I've put these videos out, but we'll just take a quick summary. So this one, APA, so it's in the pipeline business, does gas pipelines and the new world green energy, not that I believe in it. Pipelines, solar, pumping solar through a pipe. Anyway, it looks quite bullish. It's been in a long-term downtrend. It's not far away from breaking this price support line. So I reckon there's 20% growth in there. Why do I say that? Look at the fib. Sorry. So 50% retracement would bring us up to 9.50 or the 61.8, $10. So I reckon the market likes round numbers. So you'd target $10. Which will give you 20% growth. That's not overnight, of course, maybe take a year or two, but at least there's some growth, and there's a 7% div to boot. Now, if you don't want to put it all in a single stock, you want to spread your risk, then my pick of the day is this ETF WDIV. So it's made up of global companies with a strong history of paying consistent, reliable dividends. So currently paying 4 to 5%. So a bit better than the banks. So the companies, these are the type of companies that they're invested in. So big corporates around the world. But there looks like there's plenty of capital growth to come there. I can't say 20% because although it does look like it's going to take out the highs, so that's possible. So there's probably, I'd say there's more growth potential than Soul Patterson's. So Mr. Motley, I think you need to get your act together, start putting out some better names for people. All right, agree or disagree, let us know. Thanks, guys.